Thank you, Trish. In fact, echoing on something you said from last night, Mr. Kim was saying the private sector is eager, they want to help, they want to get engaged, they want to get involved, they just don't know how. They need someone to tell them what the roadmap is going to be, what's going to happen. So I think it's an important point. One way to prepare is to have that roadmap of what to do.
Give them the roadmap and then let them think about how they can best plug into it, because they are running a business in the end, right? So it has to, they can't be told. But if you give them a roadmap, they'll find a way to plug in.
Wonderful.
And I know, just Cargill and I think DuPont, they have in their business continuity plans ways of capitalizing on an opportunity. Like, how could we also find a market opportunity while we're, having our business continuity plan, so.
Thank you, Trish. And now we move on to Daniel Hanna. Daniel, you had a very important perspective on the Sierra Leone operations from your bank. I understand that you were actively engaged in transferring the funds from the financial centers into the Sierra Leone, and that was an experience. Some things worked well, some didn't. There were regulations that could have been different, could have expedited or provided obstacles. Can you share that experience with us?
Sure, thank you, and thank you for the invitation to the panel. I guess I'm going to pick up on a lot of what Stacey and Trish has already said in terms of the private sector's willingness to engage, and also I think that there is definitely scope for better collaboration ahead of time to make things easier. I was struck by one of the comments in Trish's excellent report on post-Ebola, which was, in a crisis, it's no time for the private sector and the public sector to be exchanging business cards. You need to have done that beforehand, and I think that really sums it up very well. In terms of, I guess, let me give a couple of examples that Standard Chartered was very much involved in the crisis. The first one is, you mentioned, Eduardo, we effectively did a lot of the payments from the multilaterals, many of whom are sitting in this room, to get funds from their central treasuries into the affected areas, and in particular in Sierra Leone, where we're the only international bank on the ground. Excuse me. And I guess I would draw sort of three themes, if you like, from our experience. The first one is, when we talk about financing, actually getting money into an affected country is a logistics challenge in its own right that needs to be solved. The second one, and again, just touching on it again, is just there is scope for us to collaborate better across private sector and public sector, and I'll come on to that in a minute. And then the third one, actually, interestingly enough, is about technology, and I think that technology that is there and is coming is going to make this hopefully a lot easier in the future. If I can just give a bit of context to, I guess, the payments situation, and effectively there were two legs to this. The first one was getting payments from New York, Geneva, or other locations from the multilateral central treasuries and the aid agencies into Sierra Leone, full stop. And then there was a second leg, which was, once the funds hit Sierra Leone, how do you get them into the workers in the field that are actually needing to spend the money? And I guess let me preface by a little bit of context about two things that have kind of happened. In a crisis, as we've said before, every day counts. So the pressures that we're working under to try and meet getting funds as quickly as possible are pretty immense. And we're very conscious of the fact that, kind of every hour till the dollar flows is really important. The second thing is that over the last few years, banks and regulators have tightened up considerably the sort of know your customer and anti-money laundering rules for very good reasons. And what that means is that there is now a much bigger onus than there was, say, 10 years ago or 20 years ago on actually having identification, knowing what the use of funds will be, being able to justify those use of funds to regulators, having verified signatures that have been verified at head office and on the field, and knowing exactly who those funds are going to. And you can imagine in a crisis situation, it's very hard for a multilateral or an aid agency to say, okay, I know it's going to be Bob sitting in that account in Freetown that's going to pick it up and here's his signature. And so trying to work through that and get the funds going is very difficult, particularly when regulators may require specific sign-offs, both to get the funds in country, so there may be local regulations that you need to meet, but there also may be international regulations. For example, a lot of aid funding tends to move in US dollars. The US Treasury has certain restrictions on nationalities that can be involved in the use of funds, and those require specific approvals to get waivers for, which you can get. but it takes time. And actually, I think our experience in the payments in Ebola was that when things started really to move and we had to get funds going quite quickly, there was a lot of work done by both ourselves and our clients to get all those IDs in place and to get, you know, the names down, the signatories down. And then the hold-up over a bank holiday weekend was that we needed one international regulator to sign off. And that stopped everything. And you can imagine we then started escalating. We escalated all the way up to the very senior levels at the government. There was a lot of support, a lot of approval. We got it moving again. But actually, you still need a paper document to be signed off, and it was actually electronic, which meant that we then had to wait for a couple more days. That then went through the system, and it was turned around very effectively and very quickly. But there was probably a couple of days when the payments could have moved a little bit quicker if we'd have sort of thought about this ahead of time. So that's kind of, I guess, getting the money into Sierra Leone. The second challenge then was once the money hit Freetown effectively, how do you then get the money into the field? And there's a big challenge in countries like Sierra Leone, for example, that are affected by these sort of pandemics, where there isn't a robust and very widespread banking sector. Now, in Sierra Leone, about 10% of the population has a bank account, and that's it. And actually, the branch network, not just of Standard Chartered, but also the local banks, is not that extensive, which means that when you are hiring contact tracers or health workers, they probably A, don't have a bank account, and B, where you want to pay them probably won't be anywhere near a bank branch. And so we then face this challenge of how do you effectively get money, cash money, into the hands of someone that you need to pay to be contact workers, and who does that? And physically, how do you move cash around a country that is in the middle of a pandemic? And so that itself becomes quite a logistical challenge that you need to think through quite carefully. And unfortunately, the way that we ended up having to do it, or actually not us, but the aid agencies, is that an agent from an aid agency would have to go to the nearest branch, then take that cash, and then give it to a whole bunch of people at the same time, which, when you're dealing with the pandemic virus that's highly transmissible, was probably not the most effective way to do it. But there wasn't really another choice, because if you weren't paying them, then obviously there was less incentive for those people to take those sort of jobs, which was very crucial to dealing with the virus in the first place. So I guess that was the challenge that we experienced, and I don't think we solved it there. And I certainly think, so two lessons I'll draw from that. One, I think it would be possible to get, if you like, protocols in place now with regulators that says, in a situation like Ebola, for example, there are certain ways and certain demonstrated needs for certain clients or certain public sector bodies where you can effectively wave through some of these issues to speed through the flow of funds. So that would be kind of one observation. The second one, which is to Trish's point, is about technology. So mobile payments would have been the solution to this problem in Sierra Leone. The problem in Sierra Leone was, unlike, say, Kenya, where there's very widespread use of M-Pesa, it wasn't actually that well covered at the time. There was mobile payments, but it didn't get to every reach. Now, if you did have a mobile banking system up and running with a lot of agents, with a lot of pools to cash, then you were able to make payments through Standard Chartered or any other bank that's using that technology to that individual on their telephone. And I think that's something that would be really powerful. Let me just add very quickly another story that we did. We were very briefly, we were involved in the telecommunication companies of Africa got together with the African Union and ran the single biggest text campaign to raise funds across the continent in Unite Against Ebola. And we did all the back-end financing behind that, putting up accounts in every country so that funds came through. And that text campaign itself, one, was very effective in creating funds, but two, also created awareness around that. And I think, again, very good example of what the African telco companies were doing in terms of technology and using that in a crisis.
Thank you, Daniel. And as a follow-up, Stacy was saying when mentioning Olga's paper.
Yeah, although you missed my nod for your cue.
We agree the paper in the folders is very good. It talks about
The exam is at 5 o'clock.
talks about the hardest hit industries, which are especially those that have a personal contact, and the banking industry is one of those. So they're hardest hit when they're needed the most. And that creates a big difficulty. So the question is, what can be done, how it can be helped, what kind of things could be done different so that the banking sector is up and functioning properly when you need it for all these cash transactions that you just mentioned?
Yeah, thank you. It's quite a tough question, because I think one of the problems is, as I think Stacey was saying right at the beginning, is that in a crisis, particularly in a vulnerable country already, you do tend to have a significant economic impact. And And I actually spent quite a lot of time working with the IFC while Ebola really started getting going at looking at how we could provide support to the banking sector in terms of funding. And there was a lot of appetite on the IFC side to provide sort of concessionary funding or working with us. And we heard of all the available tools that you can use that in terms of guarantees and risk participation and others. But the challenge was that the local banks themselves actually faced their own balance sheet issues and were frankly more focused on dealing with those than acting as a transmission mechanism into the wider economy. And so even though there was money available at sort of very attractive pricing, they didn't want to take it because they were like, look, I don't want to keep lending. I need to sort out my own problems. Now, they didn't say that, but that was kind of, I guess, my interpretation of what happened. And so what we took away from that was kind of, okay, so the transmission mechanism of the banking sector is not necessarily working as well as it was. So there's lots of available funding, there's a lot of goodwill at the international level, but it's not going to flow through the banking sector in the way that it may do in some other countries. And I think we heard the example of Mexico, for example, earlier. So working with the UK's DFID and CDC, we put together a different route because we were on the ground. And we put together a $50 million facility for local companies and SMEs, which we managed to put together in 10 weeks. So you can do these things quite quickly when there's a lot of will. And that was specifically aimed at basically getting working capital into the economy for two reasons. One, I think just the multiplier effect of having that working capital in the economy was pretty important for reconstruction and growth. But the second one is a little bit linked to a different theme, which is our observation was in the crisis, there were companies on the ground that were very well placed to help from a logistics standpoint. But they didn't have access to working capital to be able to go and get the sources and supplies and workers that would put them in a position to respond to the crisis or to work with international aid agencies. So rather than just importing everything, you might be able to use quite a lot of local content effectively, which then has a significant multiplier effect on the economy. And because the banking sector wasn't really equipped for that at that time, working with DFID and CDC, we put this facility together and it was aimed very much at that sector. And so we dispersed it through Standard Chartered so it had to be clients that we could onboard effectively. And then we put it through the bank itself. Now, I guess the lesson I draw from that, and I guess the challenge that we're looking at the moment, is there's no real reason, I think coming back to Trish's point around preparedness, why you can't identify that list of companies that could locally contribute in a crisis ahead of time, put in place a facility very similar to the one that we did with UK's CDC and ourselves, and have it ready to go. And I guess one of the things that I think came out of the BCG World Economic Forum report, which I really agree with, is that in your preparedness and thinking through, not just the public sector coordination, but having a sort of a list of companies on the logistics side, on the financial side, and relevant local partners who you can draw on in a crisis, I think is very powerful. And I think you can take that step forward and say, okay, and there are ways to have funding from the likes of Standard Chartered and CDC DFID that would facilitate that even in a crisis situation.